Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Torrent Power Limited, hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshvardhan from IIFL Securities Limited. Thank you, and over to you, sir.
Thank you, Stephen. Greetings, everyone. On behalf of IIFL Securities, I welcome you all for the 3Q FY22 earnings call of Torrent Power. Firstly, I'd like to congratulate the management for a good performance and notably stepping up the dividend payout. Thank you very much, sir. Today, to discuss the results in detail and share the performance outlook, we have the senior management team of Torrent Power, represented by Saurabh Mashruwala, VP Finance, Rishi Shah, GM Finance, and Jaiprakash Khandwani, AGM Finance. I now hand over the call to Saurabh Bhai for initial comments, post which the floor will be open for Q&A. Over to you, sir.
Thank you, Harsh. Yeah, good morning to all of you, and thank you for joining the earnings call of Torrent Power for Q3 FY22. First, I will take you to the performance for the quarter, after which phone lines will be open for Q&A session. Next, the performance of the quarter at Ebitda level first, and we'll take tax expenses separately thereafter. Reported PBT for the quarter stood at 509 crores as compared to 399 crores in corresponding quarter last year. It is an increase of about 110 crores, about 28% on a reported basis. Well, there were no one-off items during the course of the current quarter, but as you would recollect, the reported PBT of corresponding quarter of last year was carrying two one-off items. First, there was a reversal of provision of doubtful debt in franchisee distribution business of about 31 crores due to better collection efficiency and increased vigilance activity during corresponding quarter last year. And the second, there was a net reversal of about 5 crores against the fuel cost. All put together, net non-operating credit was about 36 crores for last year, Q3 FY21. Adjusted for this one-off, PBT for the quarter stood at 509 crores compared to 363 crores in the comparable quarter last year, which is higher by about 146 crores, about 40% increase. We'll now take you to the key highlights on improvement in adjusted PBT of 546 crores for the current quarter. The improvement in the operating profit is mainly coming from, there are mainly three reasons, so I'll just elaborate one with first reason. The first reason is improvement in profitability of gas-based power plant on account of four factors. There are four factors contributing a gain of about 85 crores for gas-based power project. First, gain from sale of LNG of 107 crores. This LNG price were higher, elevated during the quarter. It made commercial sense to sell LNG instead of converting into electricity. Second, higher profitability from the merchant power business of about 37 crores. We sold about 66 MUs at a contribution of 6.70 rupees, which has earned about 44 crores of merchant gain, as against 48 MUs sold last year similar quarter, 40 contribution, and we made gain of about 7 crores. The differential gain of about 37 crores is made during the course of this quarter. We either sell LNG or the merchant power. It's interchangeable. So during the course of this quarter, we sold LNG also, we sold merchant electricity also. These two items were partially offset by reduction in contribution of about 9 crores on account of lower fuel saving due to lower PLF, which is partially offset by the lower O&M cost for our gas-based power project. Also, there was an increase in O&M expenses of 50 crores due to scheduled major maintenance, which we generally carried out every 3 years, and reduction in fixed cost recoveries. So in summary, Due to above factor, gas-based power plant profitability has improved by about 85 crores on a net basis. The second point is moving to the performance of the distribution business due to restoration of industrial demand, which was impacted last year due to COVID-19. There was a reduction in T&D losses resulting in a gain of about 19 crores. The third item is there was a reduction in finance costs for the quarter about by 33 crores due to lower rate of interest and reduction in average cost of average debt level. The interest cost was lower by about 20 basis points in the course of the quarter as compared with the similar quarter last year. The debt level as on 31st of December 21 was lower at 7,528 crores as compared to 8,374 crores as on December 20. It is about lower by 850 crores. So we are able to reduce the debt by about 850 crores. On operational performance of the quarter, distribution business witnessed normalization in demand with increase of about 4% on a year-on-year basis due to opening of industrial as well as commercial units after COVID-19 second wave. Demand of Q3 22 has witnessed about 2% increase over the pre-COVID period, and the year as a whole is expected to end with the demand reaching to the pre-COVID level of FY20. Moving on to the PAT numbers, corresponding PAT reported for the quarter is 369 crores as compared to 320 crores in corresponding quarter last year. It is higher by about 59 crores, about 15%. This completes the overview of the quarter financial and operating performance of the company. Now I will move to the giving update on the current project under pipeline. First, 115 megawatts CK5 project has received an extension of SCOD from February 22 to September 22. So we got some additional time for the commissioning. EPC contract has already been awarded and the project is likely to be commissioning during course of FY23. Second, SCOD of 100 megawatt GUNL project extended up to October 22 from July 22. So here also we got some additional time to commission the project. Third, SCOD of 300 megawatt TPLD project is also extended from up to December 22 to November 22. Fourth, the bidding process of 300 megawatt AP project, wherein we were L1, sent cancelled, so this project is not going to be take off. With respect to takeover of license distribution business of Union Territory of Daman and Diu, as informed during the last call, the stay imposed by the Bombay High Court on tender process has been vacated by the Supreme Court, and accordingly, Union Cabinet on 24th of November has approved the formation of company to privatize the distribution business of Daman and Diu and sell of equity shares to newly formed company with the highest bidder, that is Torrent Power. The last one is acquisition transaction executed with the CESC as well as Lightsource BP expected to be completed in the course of Q4. That's all for the quarter. Now I would request coordinator to open the line for Q&A session. We wish everybody to stay safe and healthy. Handing over to the operator. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aniket Mittal from SBI Mutual Fund. Please go ahead.
Yes, sir. Thank you for the opportunity. Just a few questions on the gas-based portfolio. So I think we had gas tied up till December 21, but we've used that more on LNG trading and merchant rather than on the long-term PLF. So if you could just highlight your strategy going forward on this front and how are we placed in terms of our gas supplies for the coming fiscal year, then that would be helpful.
Yeah, thank you, Aniket. As far as gas is concerned, as you know, we have floated tenders. In fact, we have existing pipes, IOC and Reliance, which is meeting about 25 to 30% of requirement of Sujan and no Sujan plant as of now. And for balance, we are contracting long-term, short to medium-term LNG from the international market. So we floated tenders for 5 years, in fact, from calendar year 22 to 27. And we got, it's a 34 cargoes tender we have floated. And we have contracted so far 3 cargoes each for 23 to 27. And so which will cover about another 25% of the requirement from calendar 23 to 27. And this total of all put together, 50% of requirement we are covering. As far as current financials are concerned, we are awaiting since the gas price is elevated at this moment, though it has a little bit cooled down. It was hovering about $38 last quarter. Now it is coming down to about $22 as of now. So we expect that the post-winter price will further come down, and that is what we heard that Russia has also started supplying to the more quantity to Europe also, so which has impacted the current price of LNG in the international market. So post-winter, we expect that the price of gas will come down, and thereafter we will contract the gas for the next fiscal, I would say. So that is what the current position of as far as gas is concerned.
Okay, fair. And just to understand once again the impact of the lower PLFs on this quarter, I think you mentioned a number of 9 crore. So that 9 crore pertains to only the efficiency savings that we've lost. Is that understanding correct?
Yeah, it is efficiency saving. Because fuel gain we compromise because of a lower PLF. But at the same time, because of the lower PLF, I will tend to gain in the O&M cost also, because my O&M cost will be also lower. So to that extent, I will be compensated in fuel loss by the reduction in O&M costs. So 9 crores is net of fuel gain, which we have lost, and it is partly compensated by the lower O&M cost.
So what would be the component for the loss of efficiency? If you could just highlight that to me for the quarter.
As of now, I don't have the breakup, but the net impact is about 9 crores for the quarter.
Fair. And there's no sort of impact because of fuel availability or tie-up not being there on our fixed charges that we foresee?
No, at this moment.
Sure. And just one last question, sort of heading into 4Q. If I look at the data for January, our Sujan plant is operating at a PLF of 25%, and Uno Sujan is largely shut. So would you say that this is a fair representation of our current supplies? Or sort of put it another way, till the time, let's say, gas prices remain elevated and we are unable to tie supplies, is it fair to assume that Sujan would operate at a 25% PLF and Uno Sujan would largely be shut?
Yeah, immediately, yes, because we have to source gas for the next fiscal, which we expect that by April winter, the price will be reasonable, I would say. So we will start tying up gas for next fiscal.
So until that time, these would largely be the PLFs.
Yeah, yes.
Fair. Thank you so much for taking my questions, and wish you all the best.
Yeah, thank you so much.
Thank you. The next question is from the line of Rahul Modi from ICICI Securities. Please go ahead.
Thank you, sir, and congratulations for good numbers despite the challenging environment. So one of the questions which I had was in terms of the LNG that you have currently. You mentioned that you've tied up almost 50%. So what would be the average cost of LNG that you've already tied up, till date for your gas-based power projects?
The LNG tied up is always linked with the Brent price and this particular slope. So it's not connected to the current LNG price, I would say. So it is always linked with the Brent price. It is a floating price, and we have opportunity to convert this floating price with the fixed price at appropriate time. So that is what we did earlier also. last year we converted all our cargoes into the fixed price. So currently it's a floating price linked with the Brent.
Okay. So any number you want to put on just for our understanding? How do we see? You can give us the slope where you expect it to go, but
Slope will be around 11 to 11.5% kind of a slope we generally contract.
okay. And in terms of dollar, what could be the amount?
The Brent, it's a Brent, floating Brent, yeah.
Okay. Okay. So second question is, sir, can you give us some updates on the solar projects you've already given? Now, on a realistic basis, so what is your stand going forward? Because obviously when we bid at the various prices, now the module prices have gone up significantly. So any view on how viable the projects are now and what's our strategy going forward? Thank you.
We are, as far as new projects are concerned, we are participating in the bidding. So, because module price has gone up, so accordingly we are bidding, considering the higher module prices. So that is what, and we keep on participating. And
Sir, on the tariffs that have already been discovered and we've won,
we are waiting to module price to come down because the issue with everybody. So we are waiting, and government is well aware about this situation, and they've extended the FCOD date also. So we got some additional time to do the contract for the modules. We are waiting for the opportunity to contract the modules.
And so this 40% BCD which has been introduced now, so will it be? So how will it, be passed on the tariff? Will our capacities be qualifying for a pass-through?
Which 40%?
The custom duty which has been introduced in the module imports from the 1st of April, in that?
Change in law is generally passed through.
Sure.
Rahul, just to add here, just to add here, see, when we had bidded for this contract, the module prices were completely different, and in last 9 months to 12 months, they have shot off the roof. Now, I think this is a major issue on the international module prices. So unless that comes down, we will be looking at it very carefully. Unless it comes down, we will not be able to do this. So effectively, we are watching on the module prices. As and when it comes down, we would want to do this. But it all hinges over the module prices internationally.
Right. So one more question I had, sir, in these bids that we've done now, everything incrementally, the government is talking about following an ALMM approach. So in these bids, are you forced to use domestic modules in any case, or you can still import? This is not.
It is open. It is open. We can use the domestic modules also. It depends on the price at what we are getting the modules.
Okay. Fair points. Thank you very much, and all the best.
Thank you so much.
Thank you. Before we take the next question, a reminder to the participants. Anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Apurva Bahadur from Investec. Please go ahead.
Hi, sir. Thank you for the opportunity. So wanted to understand on this gas availability side, now that we have we have sold the available cargoes, what will be the availability for our gas power plants in Q4 and for the financial year FY22? And also, what is the kind of under recovery that you're seeing over there on a fixed cost basis?
As far as we explained in the beginning of the call, to the question of Aniket, the gas, we have a contracted gas for 22, calendar year 22, 26, 27, about 50% we have already tied up. Currently, we have about 25-30% tied from the IOC as well as the Reliance. So Q4, yes, we don't have tie-up beyond this gas, but we are waiting for April, post-winter. Our view is that the gas price will come down because it started coming down, in fact. So post that, we will tie up for the next financial year.
Okay. Sir, what would be the expected hit on fixed cost recovery in Q4 then? And also, how much was the availability lower in Q3?
Fixed cost as far as Sujan and Unosujan is concerned, it is passed through. So there is no practically hit on the P&L as far as fixed costs are concerned.
Okay, so even without the gas, you were able to maintain the availability, plant availability.
Yes, even without the gas, gas is available. In fact, gas is not the issue. Gas we can even source also.
Okay.
So we can establish plant is available. We can establish the availability of the plant.
Apurva, the question is here about pricing and not availability of gas. So gas is amply available at a certain price. So fixed cost recovery is not an issue here.
And fixed cost recovery is based on the plant availability.
Okay, fair enough. I think so that even in Unosujan it won't be a problem.
Yeah, that is what we are saying. Unosujan won't be a problem because plant is available for the supply of the power.
Right. Fair enough, sir. Thank you so much. I'll get back in touch with you.
Thank you. The next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Thanks a lot for this opportunity. My first question is regarding the segment-wise breakup of Ebitda numbers for the quarter and 9 months. Could you please share them?
I can give the quarterly numbers of Ebitda. For gas-based project, current quarter need about 300 crores Ebitda. Comparable quarter 218 crores. And the renewable is about 114 crores versus 129 crores. License distribution about 352 crores versus 327 crores. Franchise about 206 crores versus 197 crores. And overall Ebitda 988 crores versus 860 crores. This is before one-off. After one-off, on a reported basis, about 1,000 crores Ebitda for the quarter versus 908 crores for the full year, for the comparable quarter of last year.
Okay. My next question is regarding your distribution franchisee business. We have seen a reduction in the level of T&D losses across these circles. Would you say that there is further scope as far as reduction is concerned, or you've reached the levels where you are comfortable?
See, if you look at the current level, for example, for our distribution business as far as T&D loss is concerned, there is always here we are improving. In fact, we currently on a YTD basis, for example, B1D is reporting 12% T&D losses. Agra is about same level, and SNK being a new circle is about 50% enable level. So there is a scope for further improvement in all these three areas.
So not to add on what Saurabh told. If you look at our T&D losses in our distribution license businesses, they are in the range of 4 to 5%. So there is significant headroom available for us to reduce losses in these areas also to that levels. So the runway is very clear. Over a period of time, this should be achievable.
So every year we can show the improvement in the T&D losses. That is what that is what we are working right now. In case of B1D in Agra as well as SNK also.
So would you like to spell out some sort of a target, say by FY23, FY24, this is how the trajectory of T&D losses in B1D in Agra would go?
No, so I think we don't give any target, Sumit, but as a strategy or as an policy, we keep on reducing losses here. We don't give any targets or any estimates for the future. But if you look at my past history of last 5 years, we have been reducing the T&D losses 1.5% to 2%. But as we move along and keep on reducing this, that delta could come down. But there will be a reduction in trajectory. That is what we can take.
Fair enough. And also finally on this gain on sale of LNG of 107 crores. Could you give us a sense of how much gas was sold, what was the the procurement price, and what price did you sell it at? And in case you would have generated electricity at that landed price of LNG, what would have been the tariff?
That would be difficult to give, but what we can say that we have, whenever the gas is available for our merchant business, we either sell gas or we make the power and sell the power. So based on the opportunity available, we take a decision and we'll do either of them, either sell LNG also, or sell power also, or we can do both also. So depending upon the opportunities available, we take decision and then implement it.
Sure. So for the coming quarter, how much is the gas availability? I mean, could you please repeat for Q4, and how much? Would there again be surplus gas because the gas prices are quite elevated even now?
For Q4 we can't give such guidance at this moment.
No, sure. I just wanted to understand, in terms of your overall gas availability, how are you placed going into Q4?
As we discussed, we have gas available for about 25-30% for capacity. So that is what that we have to manage with those kind of a quantities for Q4 at this.
And Sumit, just to add what Saurabh said, Q4 typically is a quarter wherein demand is also lower. It starts picking up somewhere from March or March mid. So it all depends on how the demand is in our distribution license businesses for which the PPAs have been tied up. So it's an interplay between both of them. How much is gas available and how much is the demand. So it's a very dynamic scenario wherein one eye is on the demand and the other eye is on the availability of gas.
Sure. Well, thank you so much and wish you all the best.
Thank you. The next question is from the line of Nitin Arora from Axis Fund. Please go ahead.
Hi sir, just more of a clarification. The gas availability which you are showing, you are saying there is no under recovery because even if I'm showing the gas at $15 available at my gas plant, the regulator is allowing it. He is allowing to show the gas prices at 3 times, 4 times pricing, and there is no under recovery of fixed cost at your P&L. Is that what you are trying to say?
The fixed cost is which is determined by the regulator. For example, Sujan fixed cost is determined, Sujan 228 crore fixed cost is determined. That is what we are talking about. That recovery is permitted because I have demonstrated the availability of the plant. Buying the power at 15 rupees is, we are not going to do that, but the fixed cost is available. We can supply power at 15 rupees also if our distribution arm want the power at that kind of a rate. But we have to demonstrate the availability of the plant. Based on the availability of the plant, the fixed cost is passed for Sujan as well as Sujan.
So why I'm asking this, because then in that case, the Gujarat regulator, which has kept the cap at $7.5 of gas, becomes eventually invalid, right? Because he's allowing you to show the availability at $15, then $7.5 doesn't come into the picture in Sujan that way. So that also should have been, going forward, even if I show a zero plant, I will still get a fixed cost recovery at Sujan. Is that the right way to look at it? Because he's allowing you today at 4 times the pricing.
Sujan is basically section 62 PPA. So we have to demonstrate the availability. So based on the availability, fixed cost is passed through.
Okay, got it. I'll take it up. Thank you.
Thank you. The next question is from the line of Pawan Vitlani from SBI Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity. Just to harp on the question asked by Nitin earlier. So in case of Sujan, there was a cap that the regulator said that it has to be closer to the medium-term pricing. And obviously the gas prices will work backwards. But in case of Sujan, it is very clear. It is you have to demonstrate gas and you will get your fixed charges. The offtake is dependent on the market price, whether the discount prices or not. So So in case of Uno Sujan, what is that reverse work gas pricing that is coming until that you can get paid on your fixed charges, but beyond that, fixed charges may not be available?
As far as Uno Sujan is concerned, though the cap is there, we will make sure that we will not supply the power beyond this cap amount. So,
sure, I understand. The second question is on the new opportunities in the distribution. We saw a couple of bids. If you could give us an update on these and any update on the distribution license that you have won, and which are the other opportunities that you are seeing on ground currently, where there are talks going on or some tender activities are on?
Currently, the Daman and Diu is in pipeline, so that is what is going to be materialized in going forward. Plus, Union Territories government is Lakshadweep is a very small area, but it is on the horizon. The government is invited the bid. So these are the opportunities available at this moment that we are looking at.
Sure. Any update on the Delhi side? There were news reports earlier that even that was on the block from the Reliance side.
No, that was not on the block at this moment.
Okay. Just last question from my side. On the renewable expansion that you have charted out on a 5-year basis, and given the current situation, what's the kind of growth and the IRRs that we can see? Because we have seen, as you highlighted, volume prices have moved up. There is a custom duty also which has been enforced in the union budget. So what's the kind of tariff is required to make a low double-digit IRR in your view, and do you see that the opportunity being there and you can achieve your higher target?
As far as renewable is concerned, we are working on both the front, organic growth as well as inorganic growth also. We are also looking at various M&A acquisitions also as far as renewable is concerned, so that we can at least get about 12-13% equity IRR returns from those projects. And plus, we are also bidding for the projects also, so that we can at least get about 11-12% equity IRR. So that is what currently we are working.
Right. So just last question, if I may. Transmission was also an opportunity that you have charted out for your long-term plans. Do you see that there could be some growth opportunities in the transmission as well, given the way the biddings are underway, and is there an organic opportunity in that segment as well?
That also we are working on it right now. In fact, we have bid for a couple of transmission projects also, but unfortunately we are not able to successfully get those projects at this moment. But yes, we keep on bidding on transmission line segments also.
Sure. Yeah, thank you so much for taking my questions.
Thank you. The next question is from the line of Dhruv from HDFC AMC. Please go ahead.
Yes, sir. Thank you so much. So just one question on your franchisee business. So on a YY basis, we have seen a decent reduction in your AT&C loss. I mean the number, AT&C percentage. Almost 6% in Bhiwandi and about 2% in Agra. And so earlier we used to understand 1% reduction in both is about 40 crores of incremental Ebitda or PBT. So, but if I look at the Ebitda number that you have given for the franchisee, it's about 197 moving to 206. So in that context, it looks extremely low. So, and even your SMK, the loss has reduced. So what could be driving this gap in the franchisee business?
If you comparable number, if you can look at Q3 21 versus Q3 22, if you recollect last year, similar quarter, we got about 31 crores of reversal of bad debt provision, which is not there in the case of current quarter. So that is why, even though I am able to reduce my T&D losses, my bottom line has not, on absolute number, bottom line have not improved because of the one-time gain we have booked last year, similar quarter.
Okay. Alright, so even after adjusting for the 30 crores, it still seems low because at least you should have benefited almost 50 odd crores because of the loss reduction plus the SMK loss reduction. But got it. Partly.
In case of Bhiwandi and SMK, there was some negative rate variances where because the sales price in Maharashtra they have reduced the sales price, so there was some reduction in the sales price also, which also contributed the lower maybe it has impacted the profitability also.
Got it. So is it possible to share the same math, the benchmark that you used to give earlier? 1% reduction is how much now in at the new, the reset tariffs? 1% loss reduction in Bhiwandi and Agra will be how much? If you can probably split that separately.
Drew, that will not change significantly. If you look at the current numbers, 206 crores versus 197 crores. If I take out 31 crores from 197, then there's a delta of around 40 crores. And as per what we had shared earlier, is 1% reduction tentatively gives us 40 crores for the full year. So given that mathematics, this also works out. So there's rate reduction is not significant impact on the parameters of 1% reduction.
Got it. Because Bhiwandi, your loss is reduced by about 6%, and about 2% in Agra. No worries, I'll probably take this offline. So the second thing was, on the gas, just to confirm, except for the 4Q, going ahead, you have 50% tied up of your PPA capacity, and of that 50% is from IOC and Reliance, which is, I believe, largely on fixed pricing, and the remaining 50% is Brent linked. Is that broadly right, sir?
Yes.
Got it. And the Brent linked, you are trying to convert that also, current floating blend, you are also trying to convert it to fixed Brent, as you had probably done earlier.
Yes, exactly.
Got it. And so the third thing was, we also have this Petronet offtake agreement, the conversion gas to LNG to gas conversion. If we don't use that, we probably will have to still take, the take or pay arrangement. So does that cost hit you, or you can get a pass through of that?
There are a couple of options available on that count. In fact, we can reschedule also. We can work with that PLL also to reschedule the cargo. And we have options to import the gas also and sell it in the market also, in domestic market also. That option is also available. Third option is we can sublet the capacity also. That also options is available. And the fourth, we can work with the DRC for pass through also. On this
so we should not be worried about this cost as such.
Yeah, not at this moment.
Got it. And so the last thing, on the solar bid, you mentioned that given the high pricing, if it remains, you will reconsider the project. I believe you have two under construction projects. One is the GVNL 100 megawatt and 300 megawatt, the 300 megawatt project. So, sir, just to understand, say, for instance, in an eventuality, if it is cancelled, what is the, is there any penalty that you'll have to pay, or how do you get out of that contract?
As far as GVNL is concerned, about 9-10 crores penalty would be there, not material, I would say.
Mm-hmm. Okay, and for the Torrent one, the 300 megawatt one?
That we are hoping to implement the project.
Okay, got it. Sure, sir. That's all from me. Thank you so much, sir.
Thank you. The next question is from the line of Devang Modi from Ardeco. Please go ahead.
Yeah, thank you, sir, for the opportunity. So just wanted to understand regarding what would be the fixed cost recovery number for both Sugen and Uno Sugen?
Uno Sugen is about 228 crores per annum. And Sugen, one second, we'll tell you the Sugen also. Can we come back to you on this offline?
Sure. And this would be out of this fixed cost recovery, what you are saying, the number, what would be the number that would be reflected above EBITDA and below EBITDA?
It is within the part of the Ebitda.
And that fixed cost recovery will be part of Ebitda only?
Yes, yes.
Okay, because from what we understand, there would be some depreciation and interest also in the fixed cost, so that's why typically.
About 625 crores, we got the number. 625 crores, 625 for the Susan project. It includes depreciation as well as interest also.
Yeah, so this entire number will flow, this entire number will flow as revenue, so it will come above Ebitda only is what you are saying.
Yes, exactly.
And so it will equate to basically both plants put together, roughly 210 crores per quarter will be the fixed cost recovery which will happen from here above Ebitda.
Yes.
Sure. And on the renewable side, sir, what kind of, over the next 3 to 5 years, what kind of size can we hope to grow to? And ultimately, is there some thought process with regards to monetizing it with like an InvIT or something like that? Because you are capping them at around, let's say, 11 to 13% IRRs, and you can InvIT them out like a lot of funds are talking of right now at like say around 8-9% IRRs going ahead or things like that.
Our aim is to reach up to 5 gigawatt of renewable capacity by 24-25. And if you look at the current project in operation as well as under pipeline as well as whatever SPA we have signed, we are close to about 1.5 gigawatt of capacity at this moment. So our aim is
including the
all pipeline projects, yes, including the SPA which we have signed.
Lighthouse and everything. Okay, sure.
Yeah.
And you were mentioning something else?
5 gigawatt of the capacity by 24-25.
Okay. And regarding Daman-Diu, so now what is the exact status with regards to when do we see the kickoff and what kind of project dynamics in terms of investment, timelines and IRRs we see over there?
We are waiting for the LOA from the government to come because the cabinet has already approved in November. So once the LOA will be available, we have started work on it in fact. So once based on the receipt of the LOA, we will take over the Daman-Diu, possibly from the April onward.
The legal roadblock which was there is no longer there. Is that the understanding?
As far as government is concerned, I think they are going to issue the LOA within the course of the current month. That is what our expectations are.
And what kind of numbers can we envisage over there with regards to the spend and what kind of revenues or Ebitda? What is the numbers that one can see over there?
It is a complete industrial belt. So that is what we can, as of now, we can share. It's a completely industrial belt. There is no residential connection there.
Okay, sure. Thanks. That's it from me.
Thank you. The next question is from the line of Aniket Mittal from SBI Mutual Fund. Please go ahead.
Yes, sir. Thank you for the opportunity once again. Actually, most of my questions have been answered, but maybe on the capex front, if you could highlight what's been the capex for the 9 months so far and our targets for FY22 and 23, and if you can break that across segments, please.
Yeah, so as far as capex are concerned, license distribution 9-month number is about 730 crores. And franchise is about 227 crores, 225 crores. And generally the Q4 capex is generally always higher as compared with the 9-month number. So Q4 and about 1,000 crores in fact we have already spent. So you can expect about another 400 crores capex in Q4. And as we given the guidance about 1,500 crores capex every year we plan to incur for next 2 years, 1,250 crores for license distribution and 250 crores for franchise distribution area.
Perfect.
Capex, more or less we are on track on the capex side.
Sure. And just one question, if you could highlight how are the, you give the numbers for T&D, but if you can highlight specifically on the collection efficiencies that you're seeing at both Agra and Bhiwandi. And the reason I ask this is because I think there's some excess 130 crores worth of provisioning that you've done earlier, and which I think we were looking to recoup in the next few quarters. So if you could just throw some light over there.
From 130 crores provision, we have got some collected also, because we keep on reversing every quarter. At least last year we have reversal a lot, significant amount, I would say, in last Q3 and Q4. So still something is pending, which we hope to collect in the course of next year.
What would be the pending amount?
Pending amount would be about SMK would be about SMK is the highest. Can I come back to you on this?
Sure, no worries. And just, maybe one last question. This is more, from a circle or a sector perspective that I want to understand. Now, let's say, given the fact that our PLF for Sujan and Sujan have dropped off, right? And if you look at the entire circle of Ahmedabad and Surat, I'm assuming now a majority of our demand, to meet that, we would be relying on the short-term market now. So what percentage of your overall demand is now, let's say, coming on the short-term market, and what prices are you buying over there at? Just to get an understanding over here on how do you see your power purchase cost moving? Because eventually your tariff is fixed, right, at this point in time. So if you can give some color on that.
Tariff is not fixed. Tariff is always variable, because I have opportunity to recover the additional power purchase cost through FCPP mechanism. So
sure. Yeah, I mean, I do understand. So that you will recover probably later. But if you give some color, I mean, in the dependence on your short-term market, how much of your overall demand are you now depending over there? And what sort of bilateral contracts have you signed? What's the average cost that you're purchasing at?
We will give that number, what percentage we are buying from the short-term market, in a couple of minutes. We have to just see the numbers, and then we'll let you know.
Sure, no worries. Thank you for taking my questions.
Thank you. Next question is from the line of Anuj Upadhyay from HDFC Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, can you mention the price at which we are sourcing gas from Reliance and IOC?
Reliance, it's a band link 8.5 slope, and IOC also is a brand link based on the about 12% slope, I would say.
Okay. And just one follow-up, sir, on what previously has been asked on the availability of Sujan. So are we using the domestic gas to show the availability, domestic gas prices to show the availability for Sujan? Because the imported one, those are quite expensive out there. So is that the domestic gas which is being shown the price cap for the domestic gas being used to show as availability for Sujan? There's some clarification on that.
Both imported as well as domestic gas, as far as Sujan is concerned. We can buy imported gas also for showing the availability.
Okay, and how much the blended rate comes at?
There is no such blended rate. Whatever is available domestically, for example, from Reliance, we can demonstrate, and balance will be imported one. There is a blended ratio fixed by the regulator.
Got it. Fair enough. Thank you.
Mr. Upadhyay, you have any other questions?
Yeah, I'm done.
Yeah, thank you. The next question is from the line of B. Vijay from Spark Capital. Please go ahead.
Yeah, can you hear me, sir?
Yeah.
Yeah. So this 3 cargoes that we have booked for gas, when does the delivery start, sir?
23 onwards. Calendar year 23 onwards.
That is from April 20.
Yes, April 23.
Calendar year.
Calendar year 23. So
January 20.
January 23 onwards.
Okay, so for this year we have 25% reliance on IOC, and we are open for the remaining 75%. We are open. We are yet to source gas.
Yes, exactly.
Okay. And can you give the merchant sales in terms of number of units and the average price that it was sold at for this quarter, sir?
We sold about 66 MUs, and we earn contribution of 6 rupees 70 paisa for the quarter.
Okay. And finally, one question on the Ebitda number, segment-wise. Can you give that for 9 months period?
9 months cumulative I don't have right now, so we can give offline that number.
Sure, sir. And our target to reach about 5 gigawatt overall in renewables over the next 3 to 4 years, that remains, or in light of the increase in module prices, etc., are we thinking to kind of go slower?
That remains right now. But we are aiming to reach up to 5 gigawatts by 24-25. That is what our current aim is.
Okay, sir. Got it. Thank you for answering my questions and all the best. Yeah.
Thank you.
Thank you. The next question is from the line of Swati from VT Capital. Please go ahead.
Yes. Hi, sir. Can you hear me?
Yeah.
Yeah. So, sir, regarding the renewable capacity of 5 gigawatts, so what is the capex guidance that you can give us, let's say, till FY24-25?
So, Swati, it is very difficult to give a capex guidance. It depends on what kind of renewable you are doing, either it's solar or wind. So for 24-25, right now we have only one project which is under operation or which is under construction. Apart from that, we have 2 acquisitions lined up for which we have provided the details. Beyond that, giving you a guidance per se on a new project would be difficult as of now, since we don't have any new projects under pipeline.
All right, sir. Thank you.
Thank you. The next question is from the line of Vishal Biraya from Max Life. Please go ahead.
Hi. What will be the extent of equity dilution for these new 15,000 crores worth of capex that you plan?
Vishal, there is no equity dilution here. Sorry, I didn't understand your question.
It was pertaining to the 5 gigawatt of renewables that you plan to reach. So, in addition to the capex that you will have to do for the existing businesses.
If you look at our current balance sheet and our current cash flows, for reaching 5 gigawatts, we don't require per se as of now any equity. We are generating cash flows of around 3,600 crores of Ebitda every year, wherein there is enough headroom for us to deploy. And our existing balance sheet also is under leverage. So I think there is no requirement of any equity dilution for reaching 5 gigawatts.
Okay. Thank you.
Thank you. The next question is from the line of Harshvardhan Dole from IIFL Securities. Please go ahead.
Thanks. Rishi Bhai and Saurabh Bhai, I had 2 questions. One was, we have seen a massive reduction in the interest outgo, which, as you explained, is a combination of reduction in debt as well as the benchmark rates falling down. Now, is there any element that we can retain in the P&L, i.e., has benefited in the third quarter as well as on a 9-month basis? And how much have we passed on in form of lower tariffs? That was part number 1. Part number 2 was basically pertaining to the broader strategy on capital allocation. It's good to see that the payouts have gone up to 33%. But again, relative to our capex plans as well as the leverage on the books, do you think there is any headroom to push it up further, or this is the adequate level of dividend payout? Thank you.
So, Harsh, on the first question of interest pass-through, so whatever reduction has happened for 9 months of this year, there would be around 15 to 20% of pass-through which will happen. Balance would be retained in the P&L. Purely because of the reduction which has happened in the debts which were there for other projects or repayments which has happened. As far as second question of capex allocation is concerned, our stated policy is 40% of dividend, and that we are hopeful that we'll meet that on a year-on-year basis. And if you look at the 5 gigawatt target also, as I explained in the earlier question, that current balance sheet and current cash flows does not warrant us to have any reduction in dividend policy. Increase in dividend policy will depend on how management or how the things come out over a period of time. It's such a dynamic scenario, wherein if there are other opportunities available in, let's say, license distribution or franchise distribution or transmission assets, then we would want to deploy capital in those areas. And if it is not there, then we will see at a future point in time on the dividend policy. But as of now, 40% remains. Going forward, we'll have to see what kind of projects are there in the hands, or what is the visibility of the project, and then we can decide going forward.
Sure, that's very helpful. And more clarity stroke your ramp-up plans for Dadra Nagar Haveli, you will make public once you take over, or you would like to brief now?
So we would like to wait for the LOA to be available with us. Then we can discuss in details about that area or about that license.
Sure, thank you. Auditor, I think if there are no further questions, can we take that as the last one?
Sure, sir. That was the last question. I now hand the conference over to Mr. Harshvardhan Dole for his closing comments. Over to you, sir.
Thank you. To thank Rishi Bhai and Saurabh Bhai and Torrent Power Management for giving us an opportunity to host the call. Really appreciate, sir, your time. I'd also like to thank the participants for joining in and asking questions regarding the performance of the company. Rishi Bhai, Saurabh Bhai, any final comments?
Thank you so much, Harsh, giving us the opportunity to present our company to the various people. Thank you so much. I wish everybody stay safe and healthy. That is what we can say. Thank you so much.
Thank you. Thanks all of you.
Thank you. Ladies and gentlemen, on behalf of IIFL Securities Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.